So my name's Simon Klein, and we're going to do a live market analysis using supply and demand. So let's just pull this up. So a quick disclaimer, just bear in mind that all comments made by myself are for educational purposes only. And you all know there's a high degree of risk involved in all types of trading, and we don't take any responsibility for your trading and investment results. So turn off all distractions, focus on what we are going to cover now. It may very well change your trading career. You will have a number of aha moments during this. I haven't had anyone that hasn't. And let's go forward. So just a quick bit about me. I think Renee's already gone through all this, so let's you can read it. Trading is a business, so treat it as a business. And hobbies cost money, businesses make money. So we want to treat our trading as a business, okay? Now here's the agenda of what we're going to cover. We're going to do a quick introduction to chart reading. We're going to ask the question, why am I always wrong? Which a lot of beginning traders, and I remember myself going through that, you always feel that you're on the wrong side of the market. We're going to take a walk through what that looks like and what you're probably experiencing if you're early on in your development as a trader. Then we're going to go into supply and demand basics, which are the foundations of how price moves on any chart. And then we're going to dive into the live markets, and we're going to analyze primarily the Forex markets. We're going to look at futures, commodities, and maybe stocks if we get a chance. And then I'll open up for audience questions and answers at the end. So just a quick introduction to chart reading. This is a chart over here. And as a trader, even if you're a fundamental trader, the first thing that you need to do on your journey to become a professional trader is to learn how to read the markets like a pro, okay? Now, that doesn't mean just going to a book and reading a book. That's not going to help you. You need to learn how to put it into action, how to actually use it in real life, not just in a book, in a real live market. And we're going to show you how to actually do that when we look at the live markets right now. And we use Japanese candlestick charts. There are many other types of candlesticks, but the most valuable, or the different ways of charting, but by far the most popular is Japanese candlesticks. I'm assuming everyone's using Japanese candlesticks. And we'll go very quickly for Japanese candlestick basics. Let me just ask you, and if you can type in the room, how many people are new to trading? Let me just have a look. I can see the chat area over here. Let me look at the questions. Let me pop that out. Okay, so how many people are new to trading? Just type it in the room if you're new to trading, so I can get a rough idea. Okay, so we do have, hi Britt. So we do have some new people. So, okay, so I'm always assuming that people are coming from basics. I'm not going to delve into, I remember I've been to some webinars way back when on different topics, not just trading, and they assume that you have a certain level of knowledge, and they kind of lose you at the beginning. So what we're going to do is, okay, Nick, you've been trading for 8 years. That's great. So let's go very, very quickly through this. Okay. So Japanese candlesticks show 4 prices. They usually show the open, the close, the high, and the low. If it closed above the open for that time period, usually it's green or whatever color you choose to represent closing above the open for that time period. And likewise on the sell side, if it opened up here and closed below the open for that time period, then it's usually red or whatever color you use to portray that. And you've got the high and the low. If the high and the low are the same as the open and close, and obviously you don't have any wicks. These are called wicks, tails, or shadows, and this is called the body. And again, it doesn't really matter what it's called. And here are 2 very important candlesticks that you must learn. Does anyone know what they are? If you do, type it in the room right now. So the one on the left is a hammer, correct. Well done, Mo. Well done, Nilesh. And the one on the right is it's a shooting star. Okay. Now most people are taught that this is a bullish candlestick and this is a bearish candlestick. Again, it depends on the context. In the context of an uptrend, and you have a movement down in price to a demand or support zone, and you see a candlestick like this, then it most probably means price is going to continue to the upside. But that's not always the case. There are scenarios in the market when you delve a little deeper into understanding price movement where this candlestick is actually bearish. And what I'm hoping to do maybe in 2018 is to put a course out, maybe, where we go through all the bullish patterns that you taught us bullish generally, but they're actually bearish, and the other way around. It's almost the opposite of what you think. And if you go and look at your trading results, and if you track your trading results, and you notice that some of these trades are not working when you buy after or on a candlestick that's forming like this and it doesn't work, go and figure out why not. That's what I did over the past 12 years. And I came to some conclusions when you see patterns, and that's how the market will be your biggest teacher. Yeah, once you know the basics, the market will teach you. Again, we need to adjust to market conditions. So here's the question. Why am I always wrong? You guys ever asked that question, especially as a beginning trader? I always seem to be doing the wrong thing. I buy and then immediately afterwards the market goes down. Or I sell and then immediately it hits my stop and shoots to the upside. And you've got no idea why. So let's go through a scenario here and look at it in the eyes of a beginning trader. So you have a market that looks like this. And you may recognize an uptrend over here, for example, and you take your first buy over here. And you're feeling pretty good about yourself. You recognize that you're in an uptrend. You were taught there's an uptrend, I'm going to buy. And the market goes up and you're in profit. And all of a sudden the market starts turning and goes against you and moves down, 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 down. And you're like, oh dear, I got to get out of this trade. And you cover for a loss over here. And then, because you're a beginning trader and you like, the market just took my money away from me, and you want to revenge trade and get your money back. So you say, well, it's going down, and you immediately take a trade, double the size on the short side, because obviously it's going down. And before you know it, the market's reversed and it's going to the upside, and you take a big hit and now you're down. And what do you do now? Well, you decide, okay, the market must be going up. So you take another trade over here, and the market again goes against you and ends up back down here. So you take a step back, you think, okay, let's get clever here. Let's really understand what's going on. I seem to be buying up here and it goes down, I'm wrong. And then when I'm selling down here, I'm on the wrong side. So what I'm going to do next time, instead of buying up here when the market comes up, I'm going to sell. So you take a trade over here and you take big size on it because you want to make everything back that you just lost in the past hour. And guess what? The market moves up again and you take your fourth loss. Now, just type a 1 in the room if that has ever happened to you. Let's be honest here. I'm putting my hand up. I'm typing a 1 in myself. Well done, Lisa, Mo, Tanya, Kathy, Tarek. Always. Okay, you can come and speak to me afterwards if you want. Ahmed, yes, of course. So what do we do about this? It's very frustrating, isn't it? You feel the market's always, no matter what you do, you're on the wrong side of the market. Isn't that true? So this is what you need to learn. You need to learn that there are zones in the market known as supply and demand. This is supply and this is demand. But it's not as simple as that. In our training, we teach 10 different types. There's actually 12 different types of supply and demand. And how to know, for example, say this is supply, how do you know when it's most likely to turn to the downside, or how do you know when it's most likely to go through? And not only how do you know that, you understand the reasoning, the depth of why the market's doing it in terms of supply and demand. And this is what we're going to cover a little bit now, and I'm going to show you how to recognize part of that. Again, I can't do the whole thing, it's beyond the scope of this webinar, but I'll show you how you can get the rest of the information at the end. So supply and demand. Now, what is supply and demand? Now, I'm going to tell you a little story about my own personal development as a trader. I started working, trading the New York Stock Exchange. And I was taught the New York Stock Exchange specialist, how to trade the New York Stock Exchange specialist system by reading the tape. So we didn't even look at charts. We actually looked at the prints, which is when a trade goes off on the time in sales, and watched the level 2 and the open book, which is all the level 2 of the New York Stock Exchange specialist. And we were taught to trade. That's how I started my trading career, trading that system. So we would recognize what the specialist was doing on the New York Stock Exchange, and the specialist was the ultimate day trader, and we would follow along because they saw all the order flow. But what happened was, a number of years later, the New York Stock Exchange went hybrid. That's part computer, part human. And this system of trading didn't work anymore. So it was back to the drawing boards. Wouldn't it be a good idea to learn a methodology of trading that is timeless, that once you learn it, you will never have to learn anything else to be able to read the markets, to be able to develop your own trading strategies apart from this? Wouldn't that be a good thing? Learn one thing, become an expert at it, and then use that to make money consistently in the market. Wouldn't that be a good thing? So that's what this is. So I came to the conclusion that supply and demand was the way to go. And as everyone knows, prices move higher when there's more demand than supply, and prices move lower when there's more supply than demand. And when the supply and demand are in equilibrium, prices tend to move sideways. So let me ask you a question. What moves markets? What moves markets? Does the news move markets? Well, guess what? The answer to that question is supply and demand. It's the relationship between supply and demand. And as we said earlier, this will never change. Once you learn how to look at the markets in terms of supply and demand, that's everything. Trend is all about supply and demand. An uptrend is when there's more demand than supply. But there are moments in an uptrend where you have downward movements. Wouldn't it be a good idea to know when that downward movement ends and when to engage the trend? That's market timing. You can do that with supply and demand. When you're in an uptrend, you tend to break supply zones and make higher highs, for example. So this will never change. So what is your job now as a trader? Wouldn't it be a good idea to identify supply and demand on the chart where they are? Wouldn't that be the next step? So you can know ahead of time where those turning points are in the market. Because prices move between supply and demand. Sometimes in trends, you may have an uptrend, but most trends come to an end. An uptrend will come to an end in usually an area of supply. But sometimes uptrends can come to an end when an uptrend comes to an end. Nothing to do with supply. When, for example, the E-minis, if you look at the New York, the stock market's making all-time highs. And how do you know when that's coming to an end? Well, if you know how to read the trend, for example, when you're making all-time highs, then you'll know when the trend comes to an end. And that's usually the top. So supply and demand look like this. Say the market looks like this. So you have to basically identify in the market where the market turns to the upside, for example. So you look at this chart and you can identify a zone, demand zone. Remember, supply and demand are not, join the peaks and troughs. That's not how it works. Professional traders don't buy at one price. It's not I'm going to buy here and pick the bottom. Yeah, we buy in zones. We buy in areas on the market, yeah. So demand is a zone and supply is a zone. And we see over here that prices drop. So more than likely, this is a supply zone. There was more willing sellers up here than willing buyers. And that's our edge. After a move up in price to an area where you know there's more willing sellers than buyers, that's not a bad place to be a seller. Now, how do you identify that in the market? So this is what you look for, but we're going to go to the live markets in a few minutes. And we're going to learn how to identify how high probability turning points in the market. So who would like me to go to the live markets and start to show you what you need to start looking for in order to identify those zones? Just type a 2 in the room if you want me to start showing you that. And we're going to look at the live markets. You may get some ideas now. Thanks, Mo and Lisa. So what we're going to do now is we're going to jump into the live markets for probably about 20 minutes or so. And then I'll go over how we can take this further. and then we'll open up for any questions. So let's jump over to my charts now. Okay, so let's start with the dollar, for example. So this is a dollar, and we can identify, like we were talking about, we can go to the bigger time frames, the smaller time frames, for example. What we need to do is, let me just show you how to do some of this. Okay, so let's open up the chart so you can see this clearly. This is a 1 hour chart of the dollar index. Okay, so I identify ahead of time, before this happens, these lines on the chart were here at the beginning of the week. In our trading room, we run on Sunday a preparation session. So this is what we did on Sunday. This is the markets that we saw on Sunday. So we're identifying areas of supply and demand. So notice there's an area here where the market went down and we shot up in a strong way. These bars, if you notice 3 strong bars, this is one way you do it. You want to see uninterrupted bars moving in one direction from a zone. This creates a zone. We also have an area here and we have a gap which also creates demand. This is demand as well. We gapped. And so we have 2 areas. We have an area here, an area here. Now, if we look from where price is on Sunday or at the end of Friday and go left, we identify a supply zone over here. This is where the market, again, we have a big red bar down, and this just identifies where this move up turned around. Okay, this is also supply, but not as good as this. Okay, now let's have a look at how the market has played out this week. Okay, on the dollar. So the market gapped up, and notice what happened. What happens here? We start going down. Why? Because this is supply. Where are we likely going to? Well, one of these areas down here, we're going to hit either this one or this one, probably the one below, because this is what started the move to the upside. Now, either of them, it could go somewhere in this zone. I'm expecting, I'm selling here, the market's going to move. Remember, markets move between supply and demand. That's it. It doesn't matter about anything else. You don't need to, again, the news doesn't change that. These orders are sitting in the market by institutions waiting to buy here and sell. How do I know? This is the footprints of big money, and this is what you need to identify in the charts. And as we said so far, one of the ways to do it is to look for big bars. Now, let's have a look at where we go to. So at the beginning of the week, we're on the short side of the dollar, and hence on the long side of the euro, for example. And look how the market, where did it go? And where did we find support? Remember, this is a hammer. This is a bullish candle reversal into demand for the first time into this level. Yeah. Now look what happens. Is that a surprise? And again, and again. See that? Now we have other levels that form. Like this is form supply, not a greater supply zone, and we have other levels like here. But this is how you start to identify supply and demand on the charts. And we can do this. These lines are all drawn, by the way, ahead of time. And you can see the same thing on multiple time frames. The beginning of the move down this year on the dollar came from this supply zone. We started the year down. We pushed up and changed trends over here. And we went all the way down. Where did we stop? In demand. Okay, this level is demand. It's a supply zone that became demand. But we're looking at big bars again, down. Again, we've got supply up here if the market would ever go back there again. Let's have a look at a few other markets. We can look at the euro. The euro is just the reverse of that. And you can see where we can look at a daily chart now. Okay, let's look at a daily chart. Here is demand. Okay, big move. Again, here is demand, and this was done already when the market does this. You see, we moved down and big bars, 1, 2, 3 big bars. And where did we stop? We stopped here. Why is this supply? Because we gapped. That's another form of supply, a gap. Okay, we gapped down and ran down. Notice 1, 2, 3. Notice a pattern here. 1, 2, 3 bars up into supply. Where are we going down to? Well, let's have a look. The market gap down here, which puts it bearish. Yeah, so where are we going down if we're bearish? To demand. That's where we have these big moves. That's likely to be the turning point. So isn't it useful to know where supply and demand is and where you are in relation to supply and demand? Once you can do that, then if the market, you need another couple of analysis tools to be able to understand what direction are you currently moving in. Wouldn't that be a good idea to know? Say you're moving in an upwards direction now, so it's not ready yet, but boom, you're moving in, once you start moving in a downwards direction from supply, well, you're going down, much like being in a lift in a building. If you're on the 6th floor of the building and you want to go to the 10th floor of the building and the lift comes to your floor and the arrow's pointing down, do you get into the lift? No. But if the arrow's pointing to the upside, well, that's your cue to get in and take it up. Much the same with the market. If you can understand the direction that the market is moving in, then you're in a much better place to enter, to time your entry. How many of you have had a great idea about the market, but timed the entry terribly, got into the trade, got stopped out, and then watched the trade go to your original target without you in it? How many of you? Just type a 3 in the room if that's ever happened to you. Yep, yes, Stephen, and Britt, and Mary, and Mo, and Lisa, sure. We've all done that, isn't it? And Jesus, and Stephen, yep, isn't that frustrating? So that's why market timing is very important. If you can put supply and demand together with the direction the market's going in, and again, you're not going to find that in any book anywhere, okay? And if you can understand trend and where that changes, put those 3 together in multiple time frames, you've got a framework in which you can read any market and understand what's happening in any market. If you can understand how to read the market, then you can trade with confidence. If you trade with confidence, then you can trade with less emotional issues with your trading because you know what you're doing. And if you know what you're doing, you're confident with what you're doing, and what you're doing produces positive results, as in you have a positive expectancy and you make money over time, then why would you care to take a few losing trades? Because losing trades is a cost of doing business. Every trader has losing trades, okay? Every business has expenses and losses. You just have to view things differently and not get too worked up about one trade that didn't work, so long as you're following your trading plan. So let's have a look at how this, so where's it going? What does this bar look like? That's a reversal bar. Where's it happening? In demand. What's likely to happen next? Well, we pushed up and down. That's because the trend is not up here. But eventually, what wins? Demand. Big bar. Notice that this bar looks almost exactly the same as this. And where we're likely to go next? Well, this is supply. Where did the market drop down? Again, these are identified ahead of time. We come back down, we're back into demand again. So we run up, and this is what the market's doing at the moment. We're in a kind of zone, moving pretty sideways, yeah, until we break one way or the other. The trend came to an end on this bar. This is moving in an upward motion until here. Where did it come to an end? In supply. What supply is this? A gap. Right, let's have a look at a few other markets, and I'll give you a couple of ideas going forward, what you can potentially use. So let's have a look at oil. This is oil futures, the CL contract. And again, if we look at the monthly chart here, we can see this is demand. Once, got an opportunity to buy on this move down, and twice over here. This is supply. The market seems to be coming to a kind of halt here. If you look on the lower time frames, we're going sideways, which is kind of bullish in this sort of scenario. Now, if we break above this area, for example, on oil, we could very well see oil running all the way up. There's not much here. This is what you call a tradable void to actually stop prices moving back up again. But in the meantime, we have other areas of supply which are stopping prices going higher, but this is not the strongest form of supply. And again, we go into more details in the training why this is not a great form of supply and why this is most likely to break this if it moves back up again. And you can see we're trapped between supply and demand here. And you can see this is supply over here. This is supply on the move down. Look, here's supply. Market comes up here, and what does it do? Drops. Comes here again, drops. But eventually, watch what happens. If you're selling here, you're making a mistake. You shouldn't be selling here at all. There's no more supply here. It's most likely gone. You don't know 100%, but these are the probabilities of what's likely to happen in this scenario. And you can see the buying pressure stepping up. The trend is up into a weak supply, and the direction is up, momentum's up, and you just break it. Okay. And let's look at the euro yen, and this is today. I'm going to show you something over here as well. Euro yen's been moving kind of sideways for quite a number of months. Since the summer months, we've been moving sideways. Okay, and you can see here is another prime example on this time frame. This is demand. See this big bar? Here's the move back down. That shows me institutions are buying this move. So when it comes back down, this is where you want to be a buyer, and there's the move. Okay, there's the move. And again, we're on a monthly chart, so this is happening. This is happening over this year until we get into the summer months and we're kind of going sideways. Why are we going sideways? Because this is supply. Why aren't we going down? Because we're above this bar. You see that? We went above this bar and closed above. This is supply on the downside, which sometimes causes a reaction, a push to the upside. But why aren't we going up? Because we're in supply. Why aren't we going down? We've got demand beneath us now, so we're trapped. And that's why we're going sideways. And we've been going. If you can recognize that today, for example, here's demand. Notice big bars pushing to the upside. Here's supply, big bars moving down. So when price comes up here, you want to be a seller. And when price comes back down, notice not here, here. Today, the direction changes to up and you want to be a buyer the whole day. And if you were trading this on a day trade time frame, you drop down to a lower time frame here. And you can see how this came down to demand. This is institutional buying pressure. There's your move, and there's your entry in. And if you're trading it today, here's the move up. There's the pullback. Here at the London Open, which is at 3 a.m. Eastern time, there's your entry. You can put your stop here, and you ride it for a big, big, big trade all day. And it's over 100 pips with around, you could have maybe a 15 pip or 20 pip. It's at least a 5-to-1 trade, 5 times your risk. Again, you have to understand about risk management and position sizing. You don't take the same position on every single trade. It depends where your stop is. The smaller the stop, the larger position you can take. The larger the stop, the smaller position you can take, so that you keep your risk constant. Okay, so those are the things that you need to start looking for. Look for where big moves begin and where for big moves end. You can see I have levels of supply drawn here. Price has not got there yet, and we can look at let's look at the pound, for example. And it's exactly the same here. Yeah, we have levels of supply and demand, and notice there's supply, not the greatest supply. Here's demand, and this is where the markets are moving from. Here's an area of demand. Look, notice again, 3 big bars up. When the market comes back down here, it goes up once, supply, twice, 3 times. You see that? This is demand zone. Okay. You guys starting to see this? And we can let's look at one more, and let's look at gold. So gold futures. So again, I'm looking at the bigger time frames here. But look, how do you pick a top in gold? This is on a weekly chart. How do you know that's a top and where to go? This is supply. Again, it's not the greatest supply. This was just the highs here. And the market gap down from there, which is bullish. It's a bearish gap. And you have a move down. Why is the market moving up from this area? Well, once you see this is supply, demand. Look, 1, 2, 3. The market comes back down. This is buying opportunity. Watch what happens. See that? And again, And here we go all the way up. And notice how we don't stop here this time. No more supply there. We go above it, and that's it. And then we go higher. And where do we stop? We stop at the highs here, and we drop down again. And notice we've got a level here, which is where we may go after that. So this is how you actually start to mark these levels. And again, I put these levels on at the beginning of the week. And again, if we look at on the daily chart, you can see you get a hammer formed over here in this demand zone. Where did it go? To this level, which was demand becomes supply, and we're kind of edging forward. Notice here we have a bar which should be bearish, as everyone's taught, but this time you can see it's not, because we wouldn't have traded up. If this was bearish, we would have gone down, okay? So you have to understand, again, in more depth why. Okay, so what I'm gonna do now is let's go back into the presentation. And I'm gonna show you how you can take the next step if you want to take this the next step. So now you've seen a simple and powerful approach to reading market. Again, very simple. You can take it a step further and learn how to do this yourself. So I have a program. My How to Read the Market Professionally course is designed to help you read the market like a pro. And this is what it entails. We have like 5 sessions. The first session will teach you how to read the trend, like we started to talk about. When does a trend begin and when does it end? And we use pivot analysis. Those are not trader pivot points, but you have to understand and learn how to read the pivots of the market, how to read price. We're not using moving averages. You don't need them. They're usually a lagging indicator. If we use price, you're going to get to know when the trend ended before you see it in the moving averages. I don't have moving averages on my charts anymore. I used to way back when, 10, 11 years ago, maybe. And then we go 3 sessions into how to read supply and demand. We go through all the different types of supply and demand they are. And again, you just need to learn how to recognize the 10 to 12 different types and how to understand whether the price is, as we said before, is going to move through those zones or not. And then the final thing that you need to learn is understanding which direction is price moving in. Is price moving up in your uptrend, or is it moving down at the moment? But wouldn't it be a good idea if you knew that you're in an uptrend and you moved down to a demand area in the market and the direction turned to up? Wouldn't that be a good place to enter a trade when the reward to risk is at least 2 to 1, for example? So here's what people are saying about the training. Marcus from Norway. Simon is probably one of the best coaches out there with a heartfelt passion for coaching and a real understanding of how the market works. He helps you view everything in a new way. The way he teaches is also really good, and he goes through it until you understand. I can honestly say that I've gotten more out of this training than I expected. Thanks a lot, Simon. And Yangos in Cyprus. I'm a newbie in the stock market and had no experience or confidence at all. I began training by watching videos and joining brokers because I needed to start from somewhere, but it all looked like a giant mountain to me until I was lucky enough to meet Simon. I really struggle with trusting people, but his integrity is like no other. I trusted him, and just some weeks later, I feel that I can make magic happen. When everybody else is telling you all the wrong things, Simon stands out from the crowd and tells you where you should really focus in order to become a successful trader. It's been a real pleasure being trained by you, Simon. So with this knowledge, what are you going to be able to do? Well, you're going to be able to read any market, Forex, futures, stocks. You're going to be able to develop your own trading strategies. You don't need to take a strategy that someone else has developed, because it's very hard to become a successful trader trading someone else's strategies unless you make them your own first. And again, I'm going to repeat that, unless you make them your own first. You have to develop your own strategies that fit your lifestyle and fit your personality. You cannot do sometimes what other people can do. And again, you see that all the time. You might see musicians that can play the piano wonderfully, but you try and you can't do it the same as they can. You have your own style. You might want to play a different way. Everyone has got their own personality, and you need to tailor make your strategy or the way you're trading to you. Make it uniquely yours. That way you're the expert at it, and you can trade it with confidence because it fits you. You'll be able to manage your risk by correctly placing your stops and knowing where to do that. Again, that's very important to know where to correctly place your stops, because if you don't do that and you don't understand that stops are not there to stop you losing money. And let me prove that to you. How many times have you put a stop in the market and it stopped you out, as we said before, and the market moved in your original direction and went to your target and you're not in the trade? So what did the stop do there? The stop didn't stop you losing money. The stop stopped you making money. You see that? You lost money, yes, but it didn't stop you losing money. It stopped you making money. So if you don't put your stops in the right place, and where you should put them in the market is where, if the market were to hit that stop, it means your trading idea is no longer valid. Get me out. That's where you should put it. You'll be able to also trade with the odds in your favor, and as we said before, trade with confidence and much, much more. It's very important to trade with confidence. You have to understand what you're doing and be good at it. And you cannot be good at something if you're not confident. Gerald from London. From day one, I was impressed with the level of training I received and the way it was delivered as well. You came down to my level and explained things in simple terms that I can relate to and clearly understand. The wealth of information contained in your training is unbelievable and outstanding. When you said that I would be amazed at the training, I said to myself, what else can he say, since he's the one delivering the training? To be honest, I was blown away by what I was receiving just in part one of our training session. That was how to read the trend. I cannot wait to start the rest of the training. I am grateful that I met you at the beginning of my journey into trading. I have lost some money before meeting you. I would have lost even more had I not got an education and training from you to put the odds in my favor. So this is what you get in the course. It's 5 sessions, each are about over 1.5 hours each. They're on demand. You can watch them as many times as you want, and I do recommend that you do that. Sometimes the first watching, you won't understand everything. So go through it again, try and practice it in the real market. Watch at your own pace. You can watch it any time of day and night. There's no live classes to attend. You get my personalized support as well, my teams, where you can email any follow-up questions you have after you've watched the sessions. We also have a live trading room where you can come and join, and you can see us trade live every single day. So this is the price to join. It's usually $4,997, but especially for this, for everyone on this webinar, and the special end of year price here, if you purchase before the deadline is Thursday, the 21st of December at midnight, you'll get $1,000 off. And I don't know, Renee, if you can put the link in the room, or maybe I'll put a link in the room. Let me put the link in the room and I'll show you exactly what you can do. And you have to use a coupon code 1000 off. So let me just show you. It's my website over here. And you can even go to here, how to read the market professionally. And it'll bring you to this page over here. Okay. And you can hit on the buy now button. Again, this is the link. Let me put it in the room. Let me see if I can do that. But I'll put it in the chat area. Type a message here. Oh, that's only going to open. 1 second. I need to get that go to everyone. 1 second. Let me do that. Entire audience. Okay, so you guys should get that link. I think that went to all of you. And I'll put my email in there if you need to be in contact. But you go to this and you click on here, and what that does is bring you to a shopping cart. And if you type in, I think it's 1,000 off, and you hit apply, you'll see it should take $1,000 off it, and that's it. So this will be active until the deadline, which is December the 21st at midnight. So here's a link again for that. And again, you know, the deadline is December the 21st. So what I'd like to do now is open up to any questions. We've got about 5 minutes or so. So if you have any questions about what you see, anything about the training or anything about how we read the markets, what I'll do actually, let me take a trader and show you a trade that we actually took I think it was yesterday. Let me see if I can find this. In the meantime, feel free to type your questions in the room. Okay, so this was a trade on the pound that we took yesterday. It was on the 18th, and here we're buying up here and we're selling here. Again, the reward to risk is there's the entry, there's a stop, there's a target around 1.3415. Yeah, and it looks like we're buying after it's already moving up, but we've got room to move. This is what you call a tradable void. This is supply, this is demand. You can see the supply here as well, and demand, and we're moving in the upward motion. So if you go and have a look, let's go quickly to the charts and look at the pound. Let's pull this back up. This was a trade, imagine, and you see, went up to, look at the price, went to 34, I think, 17. We got out at 34.15. This was a trade taken live in the trading room yesterday. Okay, and this is all, and you can see, this is all about supply and demand, same thing. Okay, let me have a look at the questions over here. Okay, so I'm going to address your one first, TJ Pacman. CCI, your favorite indicator? I don't really use indicators. I use the CCI in certain circumstances to trade breakout, to trade bases, basically. And I hope in the new year to put out a training, it's going to probably be called All About the Base, about trading bases, how to trade them for profits most of the time. So I use the CCI primarily for that, to know when there's going to be false breakouts or bull traps and bear trap scenarios, how to trade them, how to know when the base is about to break. I'll give you an example, actually, because if you look at the euro yen, and again, watch this. The odds here in this scenario on the this time frame now is that we're going to break to the upside. Okay, I know that ahead of time, that the probability, and I'm not saying, again, hear me carefully, I'm not saying it's going to, I'm saying the odds are it's likely to break to the upside. So how do I buy this? I can buy this again today would be the time to buy it down here. Down when you hit demand, you don't want to buy a break when you're up into supply, because the odds are maybe it won't work. But if you buy it down here, you can be profitable even if it doesn't break out. Do you understand? So how do I know it's likely to break? Well, it's been up here a number of times, meaning that the orders sitting here on the sell side are probably depleting, and at some point it's going to just break above if the momentum and the direction and everything is pointing up, which at the moment it is. Let's have a look. Yeah, I do, Fred. I have a program to come up with a trading plan. If you go to my website, let me just let me go over here. Let me just click back. I was just changing the video on this just before, but if you go to my website, we've got a how to create your own trading strategy. It's not really a trade, it basically goes through how to actually, if you can click on it. And this will teach you how to build your own trading strategy. Again, you know, it'll teach you how the steps you need to go through and what to actually start building and what goes into your own trading strategy. So yes, you can do that. And again, you can, everything's here. Okay, a couple more questions. Thanks, Ahmed. Yes, Fred, you do need to tweak your trading plan. Thanks, Kathy. This is really good, Simon. Thank you very much. Tudor, you can come and join our trading room. And we're thinking of maybe putting a signal service on in the new year, in 2018. We're talking about it now, where you can actually maybe copy our trades as we take them. But come into the live trading room and watch us trade live every day. And we show everything. Show a live trading platform. We show our trade entries, exits. We show everything. We're completely transparent. And again, you can get to that at the bottom here. There's a live trading room. You go to my website. You can subscribe to a YouTube channel. I do a video once a week on where the dollar is going next. So feel free to go and subscribe to that. And you can watch it on the blog. You can sign up here and watch a video about how to build a profitable trading strategy. Okay. Also, we'll go through how you actually do that. Okay, I think we've got time for one more question, and then we're going to wrap up. Oh, here's an interesting question. Eileen, you asked, what is the euro going to do? That's an interesting question. Guess what? I'm going to tell you something very interesting, which it's going to sound interesting to hear it from me. Yeah. As a trader, you do not need to know what the market is going to do to make money consistently. We have no control of the market. You have to know where there are high probability scenarios setting up in the market and what you are going to do when the market presents one of those scenarios. That's what you need to do. You need to more focus on what you do. You have to obviously understand how to read the market and understand how to identify a high probability trading scenario. So again, I think we're out of time now. Is that correct, Renee?
Yes.
Don't want to overdo. Don't want to overdo the time. So if you have any more questions, again, I put my email in the room. Feel free to email me. And if you want to talk, we can talk on Skype. I'll send you the details if you send me an email.